Hey guys, I hope you are doing great during this market recovery. Today I would like to dedicate this video to the analysis of the current situation on Bitcoin and the market in general, and then I want to reveal one thing that helped me understand that the market is not going to $100,000 in 2021, and that is going to be a huge recession, and the downtrend is coming. So let's start with the Bitcoin analysis. So as you can see, the thing that I talked about in the previous video that we released a few days ago. So basically we were breaking this local counter trend line, and it was logical. I was expecting either the reaction from this strong resistance level that we held before and around 18,500, and also we had a strong resistance level of the 2017 all-time high of the previous cycle. So, and I told you that probably after the CPI we will be triggered to push the price through this double resistance levels, and if we do, then definitely we are going to pump. And as long as I was looking at these 4-hour and daily candles, I noticed that this is some kind of parabolic formation, and I wasn't even tempted to short it. I was only holding my spot positions that I mentioned in my Twitter account recently. Was happy that they are turning into profit, and definitely I was looking at this, and a lot of people, I know that some popular traders and good traders, decorator traders, they were trying to short this one, and I was tempted to, actually, to be frank with you guys, but I didn't want to be caught here because I knew that this is some kind of parabolic run, and on the daily time frame it looked like it wants to push, and the parabolic run has to play out fully. How does the parabolic ascending looks the same way as descending? It has to end up with some kind of daily, or at least here on this chart, it has to end up with the daily spilling candle. So we need some kind of ending here with a candle that is going to be big, usually, not always, but on a 4-hour time frame we already had this kind of and definitely we can expect some retracements, but not guaranteed. But on the daily we still have room to go, even though we have met the monthly or at least weekly. And as you can see, if we turn on the 30 EMA, we found the resistance right precisely upon this 30 EMA band. And if you will turn on this on the monthly, we still have got some room to go, somewhere around 21,500. This is the levels that I mentioned in my previous video. I told you, if we are breaking, we need some power, and if we are breaking this, we have to break it very fast, and we should not have any retracements or rejections, at least even on 4-hour time frames. So definitely I wasn't tempted to short here this time, just was sitting back and looking at the chart and waiting how the things are going to end up. So we have this another level of resistance here, and we crossed, even almost reached this previous high that from which we started to dump. And I think this time we are going to make a re-high. We don't know where the price is going to start the new week, but I think based on the weekly, on this juicy week closing, we can expect some kind of, at least the start of the new week is going to be tomorrow, and the new weekly has to react on the previous weekly closing. So probably we can make some local break, maybe fake out, then dive back under and go for the retest. Who knows, maybe this next movement is the trend is going to, and the narrative is going to hold, and maybe we are going even higher to 24, 25. But I don't see any movements higher than that. I don't expect us to reach 28,000 or 30,000 like a lot of people now are telling right now soon, and I will explain why. So let's look at the higher time frame first, and what we can see, a lot of people now are talking about how this is how they are expecting this kind of move here, and we are repeating something like that, and we are going, maybe, I don't know, but there are some things I know and they are interesting to understand. So first of all, let's look at our global market macro chart first. And what we have here, exactly that I was talking about, our logarithmic chart. Let's switch to the weekly so we could understand it better, I guess. So basically we held, and I told you, follow this orange dotted line. As long as we hold it, we are safe, and we don't know only, and we are encountering right now this global counter trend line like we did here, and we don't know how the price is going to react. And I think right now this movement, it actually changed my views about the bottom. I already do not expect the zones that I was expecting before. Maybe we are getting them, I don't know, but even if we are, I don't think this is going to happen in the next 2 months, and I will explain why. We'll look at some indicators helping us to understand it in the coming minutes. So first of all, we don't know how the next weekly is going to close, open, maybe with break of this counter trend line, or most likely, first of all, I think we will try to retest it. It is going to be around 21,500 or maybe even 22,000. We are going to there and are going to be rejected somewhere there, and that would make sense for me. I will switch back to the daily. So we would actually, let's turn on some indicators, maybe we'll see some help. Well, probably, maybe. First of all, I would like to see if we get the rejection here, then we can go for the retest, and that would make sense for me. I think we have, before breaking this important level, at least we need to retest, and we will have some Kijun support somewhere here if we get rejected somewhere there, and 19,200, or maybe even we will retest, but I don't think so at the moment. Maybe if we lose this one, we will retest even this orange dotted line, but I don't think we are losing it this time anytime soon. And maybe after we retest, get rejected, retest it, and we will break it, maybe start some kind of consolidation here again, and we'll continue to go up. I don't see us losing back under our important levels again. I don't see, like I would say before. Let's switch back to the normal chart. So I don't see I see some kind of reaction here, but we will have to retest, I think, the 2017 all-time high of the previous cycle, or even we are going to retest even up to 18,500, 18,700, and that would make sense for me from some kind of pattern formation analysis. First, because we would have something that reminds us about inverse head and shoulders, then we would be set for a higher recovery up to 28 and maybe even 31, 32, who knows. But it is early to say that. We need to see first how the weekly is going to open and how we are going to trade there. But but the thing is, I think we will test 19 600 800, the previous cycle's all-time high, 100%, and there is 70% or 60-70% chance that we are retesting 18,500, 18,700. That would make sense only if the invalidation of this scenario is only if we get back and lose this 18,500 support. We lose back under this important resistance that we broke here. Only then we are set to go lower. But the chances of that are highly minimal at this point. And here we come to the... Okay, let's start with another thing. Why I think in the next 2 months we are going to continue the upside movement. So we are not falling below 18,500. Yeah. So basically, monthly Kijun will help us to understand it. If you remember in my some of my tweets, I think on the 2nd of January, I told you that I don't see us falling below this, below that much, because we have got pressed. Let's switch to a clearer chart. No, we don't have it. So I don't see us falling below that, because we are got so much pressed to this monthly Kijun. So what was the possibility? I told you that we either retest this low and get up, or maybe with some kind of abrupt break to 14,700, 800. But we didn't even do that. We went straight up, and that also makes sense, because if we are what are we going to do here? Because from the point of how we are going to cross this monthly Kijun will depend the whole upcoming movement of the market and of the Bitcoin price, its price action. So, for example, let's assume that we are not breaking this $22,000 resistance here this month, and we will try it this week and then start some retracements towards the previous cycle's all-time high and maybe 18,500, 18,700, don't know it yet, but that would make sense. And until the end of the month we will come back somewhere there, and then we will start the new month with the retest again, or we are going to open up there, and until the end of February we are going to be pushed even higher to 25, at least 24, 25. I think so. Why? Because the higher we are going to be, the better it's going to be for us to open under this monthly Kijun. And from where we are going to open this, the price will depend what is going to happen next. Because if we are going to be so pressed up to this level as resistance, we are going to be pulled back. If we are open up somewhere where the price is going to be more free for the movement, then we can have some move up. So definitely I think to continue the move up we need to open up somewhere, at least somewhere here, where we would have some space to and room to go even higher. And then of course we will know where the total resistance is going to happen, so we would know where to start the short, and we have the privilege of that against the other players, the other traders on the market, because we know Kijun and it shows us where rejection has to be. And even if we start somewhere bullish here and we start ascending here, we will soon find it is not going to be that way. We are going to be very close to this line. So basically, sooner or later, when we close there, we are going to be rejected. And when we are getting rejected, then we are going to be get back. This is logical, totally logical for me. And depending on how the things are going to happen after we cross this monthly Kijun, we will understand what is going to happen next. And there's another scenario that I was talking about before. We can look at it, I guess, on our chart. No, I don't have it right now. Okay, won't show it today. So, but why did I change the narrative so far? Because not because we were in some kind of, let's look at this, Bitcoin was in some kind of range. This is our previous all-time highs, cycles all-time high. Yeah, we have this range of the previous cycle. Sorry, this was it, and this is the range of the new cycle. So it kind of looks like we had, or we lost the support of our, or you can even, whatever you build this even line building upon this line to, it looks like we were trading within this range, and then we had some fake out, and then we reclaiming it. If we hold it, then definitely it looks like we had a deviation, the classic deviation that we were trading during this descending market, shorting it based on deviations very often. So it kind of looks like that. But my thoughts of why we are changing and probably not seeing these lows that I marked before, these lows, maybe after some kind of run, midterm run, but not immediately. Why I don't think we are not going to do like we did before here, when we are breaking this counter trend line and then we start rejecting and declining and going for the new lows. Why I don't think it's going to happen like that. Maybe it is going to happen kind of similarly, but that will take much more time to get back to the descending path. Why? Let's talk about something that I was thinking to mention during the last video, but I forgot about this one, that I saw this and this caught my attention. This is the moving averages, and I didn't pay attention too much on that, but the thing that I was predicting, that market is not going to $100,000, and the whole and how I predicted the market reversal when everybody thought it is going to skyrocket in 2021 at the tops and even here. This was the death cross, the crosses, the golden cross, the death cross. A lot of people do not believe in it because simply people do not know how they work and which cross is valid, legit, or which are just messing, and they do not know patterns of these death crosses and golden crosses. But I spent a lot of time in 2019, 2020 studying the traditional market, the stock market, where the patterns of this market, the old ones and the new ones, and I have found a lot of setups and patterns, how this and examples how these patterns and fractals they work out, and they are totally acceptable to the crypto market, and they work here too. So people simply do not know first how the crosses work and when they are legit and how to use them and what is that cross for the market maker. So we are going to find out it today here. So the reason I am changing my mind is, yeah, I usually look at the high time frame crosses, and my judgments were based on the daily time frame. I start to look. I only look on the crosses, death crosses or golden crosses, only on the high time frames starting from the daily time frame. But this time I turn on to the weekly, and what have I seen? As you can see, for the first time, I guess, in a lifetime of the Bitcoin, I checked it out before. For the first time on the weekly time frame, Bitcoin is reaching the death cross of Bitcoin, and it is not a game actually. These crosses, even touches can be escaped, but the cross is not a thing that is possible to escape. So definitely, if Bitcoin crosses makes a death cross on the weekly time frame, this is going to be a disaster. So the market makers, they know that, and they are trying to save the situation. How the cross? What is the death cross here? It is the cross of the 50 moving average and 200 moving average, and as we can see, the green one here is the 50 moving average, the 200 moving average is red, and when the and what we can see here, when the 50 moving average is going to when the market is pumping and ascending immensely, the 200 moving average, it falls behind. But when we start dumping and turning in the downtrend, the 200 moving average starts to catch up with the 50 moving average. And what is happening here? As we can see, a few months ago, when we were trading somewhere here and we lost and we got rejected here and we dived back under the 200 moving average, I told you that we are going down. So, and it is a bad picture that we are going down as long as we are under this 200 moving average. And a lot of people who are relying on those rainbows, as you know it, as they posted on crypto Twitter a lot in their feeds, those perma bulls, they are always posting their rainbows, rainbow charts for Bitcoin, and when they broke because there are no more colors on those rainbows and the price went lower, they didn't have any indicators that would show them where the bottom is going to be. So of course we started to rely on the history. So we were looking at the trading ranges, and the first one seemed to be around here, around 12,000, 14,000, and this was my target too, even from $34,000. This is where I was expecting. Not guaranteed. I wasn't blind enough to believe that we are totally getting there, because a lot of people already believe that we are getting there. So I didn't expect it to happen very soon, because even if we getting there, it is not going to be soon, and when nobody expects that. So, but a lot of people didn't simply look at the 50 200 moving average from the weekly time frame, and we have this situation here. The moment we couldn't reclaim this 200 moving average on the weekly, we started to go down, and with each move lower, the 50 moving average started to descend more, and the 200 moving average started to ascend more towards the 50 moving average. And if we continued to go lower here, yeah, like we were all trying to expect, then they would somewhere here they would 100% cross itself, and they are very serious. I know a lot of you do not believe it that they work, but later we will talk about it and we will find out why they are so serious. And in this particular case, this would be very serious, because if we would cross it, and even after the cross we would start the recovery, we would all anyway get back and went even lower, and that would be the total disaster for the altcoins segment of the cryptocurrencies. Of course, Bitcoin would survive. It would still have a lot of space to go lower, because you watched my worst scenario video, I hope, and you saw that we still can go even up to 900, 500, 9,500, somewhere there, theoretically. But today we are pumping, and this is cold-blooded counting and the scenario of the market maker, because we need to fix the situation, and we are not going to go back, in my opinion, right the way we did here. We are not going to do that, because if we do that, all this movement is going to go to waste, and they are going to cross soon. So what we need to avoid the situation, for that we need to continue to go at least slightly trading somewhere here, holding these levels, or 19,500, and slowly going up, so we could reverse this 50 moving average, and this 200 to reverse from this one. So a little bit, and maybe we will have some even some chopping market also in 2023 too, after we reach some of these global levels, resistance levels. Then, and as long as it gets safer when they start to getting apart from each other, then we are going to have probably maybe this retest. I kind of sure that we will get it sooner or later, and probably we are getting back and retest the zone of the this cycle's bottom at some point. I kind of believe in it, that we are getting it. I'm not sure about going lower. That would be not necessarily at that moment, and would actually create the situation then when these bands are going to cross again, meet and probably cross again. So we don't need that. So that is the primary reason why are we starting to pump right now. We need to avoid this big and disastrous break cross of these bands, because if we cross it, then we will 100% will have to go lower, at least in this zone first or second. So these are my thoughts, guys. So if you in general, let's sum it up. If you are seeing some retracement, yes, if we have something like this and we retrace to the previous all-time high, or even 1870, 700, 18,500, then I would think that it is a good place to start buying or try to long, because you will have a clear invalidation levels. If we lose it and close below, then we are going to talk about another situation, but I don't know what is going to happen to this moving averages then, and with the consecutive markets. So, but I think we will hold these levels, and this is going to be a good chance to onboard to some of the altcoins, I guess, that you missed maybe, and I'm going to get on some of them, I think. So these are my thoughts. They are not guaranteed, but they kind of make sense to me, at least. So now, guys, let us talk about the crosses, the death cross and the golden cross. So why are they so important, and why I was using them to figure out, and how I was using them to figure out whether the market in 2021, whether the market is going to go for $100,000 like everybody was expecting, and comparing to the previous markets areas and movement ratio, why I didn't expect us and didn't believe that we are going to $100,000. And of course, the death cross and other stuff wasn't the primary reason. I had a lot of reasons. So in 2021, when we reached the $60,000 area, I have already had assumptions that we are going to find the rejection, and we are going to start the distribution zone somewhere there. And as you can see, we did that. It wasn't a clear zone here, but it is clearly explicable because the market makers and big money, smart money, and their market makers, they are playing against not only the newbies of this market, they are playing against the decorated traders. And for that, they have to create the situations where these decorated professional traders, they stop to believe in their views. So basically, if you believe that, like me for example, that this is our distribution zone, then they started to confuse you and to make you not believe that you are right. They are starting to do some fake outs here, as if we are not, we are continuing the movement. Fake outs here. Another one was a big one here. These were only to make you guys to squeeze some of the shorters and longers, and to mess with the decorated traders, so they wouldn't so they would mix up their thoughts and would give away their thoughts that we have come to the resistance and to the major reversal market point. But for me, it was clear when we first drew this candle, because when we drew that and we didn't play out it as it had to be played out, because after this kind of candle we need to draw another candle of the same size like we have here, and this is what exactly happened here. We had to either draw another one of the same size, or draw it and then buy it back very fast and turn it with in a green one with a big green wick. But we didn't do that, and the moment we didn't do that, I thought the market maker is driving us higher, but we are not exceeding very much. We are not going to 80,000, 100,000. We are going to find the resistance, final resistance somewhere there. And as you can see, no matter how we tried to go higher, the movement started to turn into a weak one. And the moment here, then when we were approaching again, after we had some drawdown, after we were coming back to $60,000 here, I was having my I tweeted in my Twitter account that if we are not reclaiming 60,100 again soon, and if we start declining upon this level, then then it is over and we are going to dump. I didn't know how much we are going to dump, but I was predicting at least to somewhere here, and we actually did that, and it wasn't surprising because we have left this sorry we have left this candle untraded like it's supposed to be traded. So we drew the same one, and then we traded it like we had to played out it in full, this scenario that was supposed to be here after this candle. So after we did that, a lot of people started to talk about the thing that everybody already saw, and they saw this death cross, and a lot of people do not believe in it. A lot of people do not understand how it works, but I will explain it to you, how to find out whether the death cross or the golden cross is legit or valid one, or if it's just a noise in the trading setups. So first of all, we had this spilling the set of spilling candles, and it was clear to me after we came to this into this zone that we are going to recover. So as long as we started to draw this descending kind of wedge, and with each descending we were descending lower, but we didn't have another spilling candle. We were not dropping. So it was clear to me, it was reminding me the situation when we first, during the run in 2021, when we tried to break $10,000. We couldn't break it to this psychological level immediately, and somewhere here, yeah. And we started to, and we had another push, and actually, yes, somewhere here, we pushed up to $10,300, and then we got absorbed and we fell until I guess $9,000 or even 8,900, and we started forming something like that. And we know that if we have this kind of crazy descending without retracements, we all leaving these candles. We will look at them right now. When we leave these kind of candles that are uncovered and untraded here without untraded zones, we always recover them at least to 500 to 50%. So we needed at least to cover first this 50% of this candle, and then come to at least to mid of this whole movement, and we will have to recover it, and then we will decide whether we are going further or we are going to reverse and go lower. So, but after I saw this on the daily time frame, this death cross, a lot of people started thinking, okay, we are going down, so start shorting. And a lot of people, why do they do that? Because they know the truth, the knowledge that is widely spread, that the market, the traders of the traditional markets, like the stock market, other financial markets, they are trading like this. These kind of crosses, these are the reaction and the sign for them that the market has reversed. But that a lot of people think that if we crossed it, then we are going to go down immediately. That doesn't mean so, because it doesn't matter. It is actually the sign for the smart and big money that the market is ready to reverse, and they have to take certain measures. But that doesn't mean that the market they are going to drop all their assets, stocks, crypto immediately. No, because we had some kind of, it is not going to happen like this, like in 2018, since we dropped below this and formed this kind of um, death cross. We already were trading under it, and we're going, it is like in the books here. And I will explain it to you why it was possible in 2018 and was not possible in 2021, and is not possible in right now in a lot of stock market assets. Why it is not possible? Because now the crosses, the death cross and the golden cross, they have become the psychological, the tool of the reverse psychology of the market. So the market makers, as you know it, and I repeat it every time, they follow the narrative of the crowd and of other retail investors and the newcomers and others, and they use it against us. So of course, when everybody saw that cross and started slightly talking about it on crypto Twitter, then definitely they had to play it against us. And in 2019, 2020, I made thorough research of the traditional markets, of the fractals, of the not only of the price action, but the fractals of how these kind of crosses they work on the um, traditional market. And there are a few setups how they fool the crowd, and this one was kind of logical to me when I saw this kind of descending falling wedge kind of. So it was clear to me that we are going to have one of these scenarios, and I posted it on my Twitter account. Let's look at it. And the moment I saw it, I made this one. It was not very precise one, because I was trying to share the thought, the general thought. It contained it consisted of three scenarios, where the first one didn't count because it was only drawn for the purposes in case we do not break this global counter trend line, and the general thought is not going to work. The primary scenario here for me was the second one. It is the most commonly and frequently playing out scenario in the traditional markets after this kind of death crosses. And the ultimate one was the third one. I didn't kind of expect to receive this one at that moment, but I was positive that we are getting the second one, and we kind of did partially, and you will see how. As you can see, after we broke it, we went and broke this resistance. We went higher, broke the counter trend line. Not going to draw it right now, and we finally crossed this again. It is not necessarily that we are always crossing back again to kind of golden cross. Everybody, when we cross it right here, everybody thinks, okay, the death cross played out here, and we are ready, and now we are switched to the golden cross. It is not like that. It still works. This we have activated this death cross, and it has the primary meaning than this one. This is just the messing around. And as you can see, the second scenario for me here was reaching somewhere, as you can see here, somewhere $48,000-$52,000, roughly somewhere here. And the moment, and we kind of did, as you can see, 48, we stopped here, started to accumulate here, then 52, and then we started to reject here and going down, and that was the sign for me. Whoa, actually we are going according to this second scenario. And when we came here, I was following DOT at that moment, and you remember that I was following I was telling you that we are at the decision point on DOT, and it had more clear situation for me at that time than Bitcoin even. And I was telling you that either we are going to reverse right now, or we are going lower, and we are going for the new lows until 24, 25 at least, or 30s first. So I was sharing this on Twitter at that time. But we started the recovery, and then we had this convenient news of the futures Bitcoin futures ETF approval, and of course upon on that uh, euphoria, we started to break all these levels, and we started to reclaim these levels. And of course, and that also makes sense, although I was already not in disbelief, but I already didn't know what to expect first, because it was kind of nasty, because this news was great, but it still didn't mean a lot in the short run. So, and the moment we broke this, and that was made sense for me. I didn't know how um, long we are going to trade above here, maybe up to 75, 72, who knows. But I was positive that we are not going to 100,000 or 90,000 even, even more, because first of all, because it was the move to mess everybody around and allow those people. A lot of people were redistributing here. When we are going lower, we are crossing this death cross, and this is the sign for the institutionals that the trend is changing and you have to bail out. And the same situation with S&P 500. When they see that they are not dumping immediately, they don't want the crowd and the smart retailers to get rich overnight and give them their money. No, they are pushing against it, and they are creating the news, so the crowd would start buying a lot, so they would have the so they would have the hype and the demand from the retailers, the crazy demand. So they have to insert some kind of this kind of news, like Bitcoin ETF approval. So they would buy and long blindly, and they would drop their holdings to you. So definitely, when we cross this previous resistance around 60,000 that we couldn't break before, and we reclaimed it, then of course everybody got bullish and started to long around. But I was very cautious, because as long as we broke it, breaking such an important level, especially here and here, we had to pump significantly. But we started to slow down first here, and then when we went for the second try, we got rejected again. And I said, if we get back under it, it's over, and we are turning in a full dumping phase. And then I remembered my uh, third scenario, and I actually couldn't believe that it actually played out too. So definitely, and since then we started shorting, and if you follow me long enough, I started to record videos, and we were talking about how much we are going to short, at what levels, every bounce we were shorting then. So to explain it to you, why I was so confident that we are not going lower, not going for 100,000 and for the new continuous bull run. Well, first of all, because I know the rules. I knew that the party is under this death cross, and all these kind of in changes here of the crosses, it doesn't matter. It is just messing. These are not important, and they don't play any role here. This one is an important one. Why? Because I know when the cross is a legit one and a valid one. And here is the list of some kind of list of rules. First of all, for a cross to be valid and powerful, it has to be found on a high time frame. I prefer starting from daily and then weekly. Usually we use on the markets, we use the daily one. So Um, and of course, we can use 50, 200 moving averages, crosses, even on hourly charts and on 4 hour time frames and others. But I don't use them because a lot of masses are around there. When they become more clear and meaning something, it is starting from the daily time frame. It is the ones that actually mean that the change of the trend in the starting from the midterm to the long term. Then, so definitely we figured out that we have to look at starting from the daily time frame. The next rule: before making the golden or death cross, for the cross to be valid, the market should be in a confident, lasting trend during which 50 and 200 moving averages bands wouldn't cross each other, preferably wouldn't even touch or approach each other too close. What does this mean? Let's look at this chart again. We for the first, what as you can see, we had a long lasting run during which, on the daily time frame, during which these bands, the 50 and 200 moving average, wouldn't cross each other, wouldn't touch each other, and even wouldn't approach each other. As you can see, we had a lasting run, and after this run, if the first cross we have after this kind of run, it doesn't matter if whether it is an ascending run or a descending run, the first cross we have is going to be the valid one, the legit, the primary one, that is going to define the further development of the things. So the same situation here. 2018, 2017, 2018, we had a run where we didn't. These runs can be these lasting, too much lasting, like during these super cycles, and they can be. Here's the descending one. It is even a little bit smaller, but still a good one. And even this one can be considered a lasting run during which we didn't have, because it was the yearly run. You can consider it too valid too. So definitely, and we will describe them we will discuss them right now when we finish with the rules. The next one: the group of several crosses can be a part of scenario of the main valid cross. Therefore, you should know a few popular setups of the mixed crosses. So let's look at this one. This is the classic 2017-2018. This is the classic death cross play out scenario. Why? Because why it is so simple to understand. Now we look at it and we can see that as long as we had this run, clear run, and even the schoolboy who just recently started to study the trading TA from the books, they could understand that as long as we cross this that cross, we are going to go down. And it was like in the books, playing out like in the books. You won't see many of them right now, even on traditional markets, because it is too easy for the crowd to understand what to do. And why it was available for us in 2017, 2018, in 2018 already, then, because this market was very young. It was filled mostly with the uneducated financially or trading wise people who were simply buying, seeing some dip, knowing that you can see dip and you should buy. They didn't know anything about cycles, about the ranges, the macro perspective, macro vision of the market. They didn't know anything, and this market wasn't even didn't have any sophisticated futures at that time. They didn't have professional traders and automated algorithmical bots, market makers, automatical market makers at that time. So definitely it was an easy catch for some smart traders from the traditional market, but it wasn't for the crypto enthusiasts that were mainly in this area at that time. So after that, already somewhere here, we already were could see that some kind of professional market makers joined this market, kind of, but not before. So that is why this is the primary scenario here, which was playing out. The next scenario is that is very popular on the traditional markets. Not scenario, I guess, the pattern that can be how the crosses can move. I guess it is going to be, I don't remember which one exactly here. I will try this one, and what we can see, yes, it is the one that works out for us very well. So we had a lasting trend, then we are crossing, that cross has been activated, we are trading here, and then we are trying to break it up again, invalidate it. We have some kind of local accumulations, not accumulations, somewhere we are starting to consolidate here, and then we are going back down and we are playing out this death cross fully. Then and we have the others. Wait for the others. Let's look at the others. Apple cross, I guess, the same one. They have the same one. So this is the very popular and beloved scenario by the market makers. We having the trend, death cross. We are messing around. We can mix them and confuse the crowd. Then we are and we are starting to trade up to from 3 to 6 months above this one, and then we are getting back down and playing out that cross in full. And there are a lot of examples like that. So basically this is the classical one, like in the books, and here is the one that we are playing. There's the second one is then when we abruptly break it and we do not cross this into the golden cross, the confusing golden cross, and we get back under it, losing it, and then we are dumping. This is the second variant. The third variant is that I showed you. It is when we are having this trend, then we are getting crossing, having the death cross, and we are recrossing into a golden cross, a misleading one. We started to consolidate here for 3 to 6 months on the financial traditional financial market, or from 1 to 3 months on the crypto market, and then we are going to play out or this cross that is activated in full. This is the third scenario. And the fourth scenario, this is the one that we had. As you can see, here is the one. The second scenario that I had at that time, this is the second scenario here. And that I was telling you about right now. And the third one, this is the one that we had here. And this is a very kind of rare kind of scenario, when we not only we are reversing, start consolidation, we either go like this is the second scenario, or we are going on until an ultimate level, and then we are starting to go down. This is a very rare, but I saw it. I had it on my computer, but when my old computer broke, I thought I lost it, but then I found this one too. And where do you think I found it? On Amazon in 2000. As you can see, the same situation Doesn't this remind you of Bitcoin in 2021? This is what I was telling to my private community, and sharing with them this kind of scenario about how we are going to trade here on Bitcoin, the same situation. And here is the same situation. As you can see, we had a long-lasting run when we didn't cross these bands. Then we are having this death cross. It was activated. We traded one range. Within one range, it is important. It is another rule or criteria to understand whether the death cross or golden cross is valid, or we are going, or whether it played out in fully. So we have another one. We have some fake golden cross, and we are having this one. This is what was 50,000 for Bitcoin, and we went down to retest it. Then the Bitcoin ETF approval news, we are heading up, breaking an important level, catch a lot of fish of the longers, late longers here, and enthusiasts with no, and we are going down back under, and we are going into oblivion. So this is an ultimate scenario that I shared with you, and it was clear to me to understand it. And as long as you know these four, in general, four patterns, how the if you know when the death cross or golden cross is valid, and you know these kind of setups, how this plays out, you are going to be very good trader and understander of the macro movement and situation on the market. And let's look at other rules. The next one, the fourth rule, is you should understand that the golden and death cross is the market maker's tool of reverse psychology. With it, they fool the crowd. No, I already explained this to me. And the last one, to consider that the cross played out in full or fully, it needs to finish at least 2.5 or 3 ranges. So why didn't I understood that when we cross this death cross and started trading here, we are not done, and it is still activated when we went higher. Why? Because we only traded through only one range here, and to be played out in full when we activate it, it is a valid death cross. It applies to all the rules. Then it has to play out at least, I don't know how we copy this, I guess control or what. No, so we need another one. We need to trade out another, at least 2. The minimum is we need 2 ranges to be traded, so we need or 2.5 or 3. So the minimum is 2.5 or 3. This is how we understand whether we are done with the cross, and we can switch into another one, valid one, and go further. And the same situation with the golden cross too. So we needed to play it out in full. And as you can see, the moment we got back under, we played out one, the second one, and even the third one. We don't know how many this can be, but to be considered to play it out in full, this is, if you don't know it yet, didn't understand it yet, this descending movement, all this downtrend, we were dumping lower and lower, was playing out of this activated major death cross. This is how it works. The same situation we can even see here with the golden cross. We have this amazing situation. Yeah, since we broke out here, this golden cross activated, we had it, and it was valid one. And the moment we cross had a death cross here. So this was a valid movement to consider this a valid death cross. As long as we crossed it, we activated this death cross. So we played out and we only had one range to trade. We traded through one range only, but it was not enough. And then we went to the upside and we turned into a golden cross and everybody started shouting. I remember it like today. A lot of people were, it was on the news that the China said that they are supporting the blockchain and they are believed it is the future, the Chinese government. And then everybody started shouting on CT that okay, yeah, China is accepting crypto. But the thing was, first, the Chinese are the massive and the number one manipulators, news manipulators and financial market manipulators in the world, or maybe even this already now the second one after this USA, but they are at the top of the manipulators, market manipulators. And I told you, do not believe that. I was reading then on Twitter, do not believe that news, because they, first of all, they didn't even say they are talking about cryptocurrency. They were talking about blockchain technology. So do not mess this narrative up. And then I said that probably in 2 weeks they will come out and say we didn't mean the cryptocurrency, we still do not trust them and ban them. And what do you think happened? In a week or so they said exactly that, and the market started declining here, and we went lower. To do what? We had this one range, and one range, the second range, and even some weeks here, 2.5. So definitely we went down to play out this important valid death cross. That is why, and after we did that, it was clear to me that we are going to an upside movement, and of course we went for another run that formed for us another valid death cross. And I think now it is clear for you what was the main reason that I thought that Bitcoin is going to dump in 2021, and I figured it out here when the price was here. Not only here, I was expecting this move down, but the moment that the trend was over for me, it was the understanding that we crossed that cross that we had here, that I said already. It was clear to me. So the question was remaining only whether we reverse here or here. That's it. That was the easy one. And we needed to play out this in full. And now when we played out, then it is an uncertain situation. And now we can only, when we came here, now we can only guess what is going to happen here and where the actual bottom is going to be. But to tell you the truth, as you can see on the daily time frame, we have this as support right now. 9,500 is our support right now at the moment. So basically, if we hold it, maybe with some fake outs, I don't know, but I'm not sure here. It is also the 2017 all-time high. So if we hold it, then we are going further to 24, 25, and after we cross the monthly Kijun, maybe even 28, 32, 34 maximum, not higher. And then we are going to be back if we hold this, all this formation. So that is the reason why I am not going for it, not falling for the new lows in the next months, because I guess I showed you on the weekly we have this we can see it here too. We have this cross coming, and we have to avoid it. For that, we need to at least trade somewhere here in this zone above it. So this so they have different colors here, so that messed me up a little. 50 and 200. So as you can see, we need to the 50 moving average to start the reversal, kind of reverse, or become a little softer here, the movement, and this one needs to start going like this, or descending like this. So for that, we at least have to start trading above it, and at some point we need to go higher. So we would start reversing this one, and this has to go lower, or at least like this. And then after we retest something like this, then we can go lower again to retest these lows, and even maybe to this one, to the existing lows, and then they will go again and they will meet somewhere here. And that is questionable right now already, because I think we will not draw another one, maybe abruptly to 13,000-14,000, but that would be very quick. I don't know, maybe even this is going to be retest, the final retest, because otherwise these two moving averages, they are going to cross each other, and that is going to be a bad situation. We never had this death cross on the weekly time frame, and we know that this is we already understand and know that this is not going to be perceived as something that we can avoid, because the market makers and the traders on the traditional markets, they will see that, and they have the understanding why it is happening. The weakness of the market they will understand, and they will not be satisfied to enter this market, and only smart and big money can facilitate the movements and the new trends right now. So if they withdraw their money from crypto, that is not going to be good for the liquidity of the current market. So definitely these are the reasons why I think right now that we are not going for the new lows. Definitely, and at least for 2 months we are going to be trading above it, above this previous cycle's all-time high, and we have some potential of going higher. So I think it was useful for you guys. Answer me in the comments if you have any questions, or if this was useful. Good luck to you guys. Bye.